What's up, everybody? It's Jonathan, and I just finished researching a trade idea that I'm really excited about. And then what I thought I would do is go through the process. So I'm going to take you through the 5 steps it took to find this trade idea. And what I want you to take away is it takes time. So today it's July 6th. I found this article July 2nd, The Shadows Over Solar Edge, written in Barron's. And to sum up this article, Sedge, Solar Edge Technologies, doesn't have a lot of competition in solar, but what's going on right now is the Chinese company Huawei is an absolute behemoth. And they're going to come and rub shoulders with Solar Edge and try to take market share from them. That's obviously going to put a lot of pressure on Solar Edge to maintain their historical market share. So Huawei, all total, does $90 billion in sales, while Solar Edge does $500 million. I guess Huawei products debuted in February of this year, competitively priced and more reliable. So right away, I start thinking, well, this is going to be a catalyst. This is going to be a big deal. To take any kind of market share away from Solar Edge, the stock's going to have a very tough time holding these levels. So I like the thesis, but it's not enough just to play the short side of Solar Edge. It's not enough just to buy puts or sell calls or sell the stock. Let's take this information and now we want to build on it. The next thing I do, I shared this thesis with my coaching students, because I want the extra eyeballs to help me research different ideas. So Sedge, I started researching this idea yesterday. I like the story, but I want to do a pair trade. I want to find something that's relatively inexpensive to Sedge. So we can play Sedge from the short side, but we can use that other company as a little bit of a hedge in case all solar stocks rally. So can anyone find a highly correlated solar stock that we can buy to hedge against long puts in Sedge? Shared the article, started getting some feedback, Fistler, and then a couple of other names underneath in the comments. This was step 2. After a day's worth of research, one of my awesome clients, Dennis Lopez, came up with an idea. Hey, have you looked at DQ? DQ has an 80% correlation with Sedge. So the next thing I do is I take that information and I put it on a chart. Because I want to take a step back, I want to look from common sense point of view, and I want to make sure that these are really correlated, meaning they really push and pull off one another. So I put it on a daily, I overlap this on Thinkorswim, going back to 2017, you can see they are darn correlated. They really, really know one another. DQ got very expensive relative to Sedge starting in November of 2017, but you'll see by February, they came back to a better semblance of value. Here, DQ got inexpensive, and now DQ, coincidentally, is inexpensive relative to Sedge. So right away, even if I didn't have a thesis for Sedge, even if I didn't read that Barron's article, I might look at the chart and say, you know what? These things have an 80% correlation. Right now, Sedge is very expensive relative to DQ. That might be a really good idea for a pairs trade. But better off, I want to be short Sedge. That's the one where I really have a catalyst. But now I could look at DQ and I can use this as a little hedge. So the first step, just doing my research, came across that article. I was interested in it. Cool. My second step is research. I want to find correlated stocks. I want to find a correlated solar company that's inexpensive relative to Sedge. The third step, I put it on a chart, do a little common sense confirmation. Now that I have 2 names, the fourth step is I want to see how can we express our opinion in the most efficient way in the market. By doing that, now we have to figure out how do we play this. Now Sedge has liquid options. If I scroll down, for me, I want to be in August. I want to be in August because that's when Sedge is going to release their earnings. I would expect on their earnings call, they're going to have to address the increased competition from the behemoth Huawei, who is now going to be in the room participating in this sector. So I figured out when the earnings estimate is going to be. They're going to be releasing earnings in the August expiration cycle. Then what I did is I backtested Sedge's previous earnings releases to see what the expected move is. And not only did I backtest it, I have this awesome tool that another one of my clients built to help me see if the options are undervalued or overvalued going into earnings. And I'll show you that now. So now I have this tool up where we're going to analyze past earnings data. Sedge trading at 51.75. Upcoming earnings date, this is just an estimate and this is wrong. Okay, so ignore this. The important information is how does it move after it releases earnings? So the average of the last 5 earnings moves is 20%. Okay, and all this is doing is going back and looking at the data from the last earnings releases. So if the average of the last 5 earnings moves is 50%, meaning after earnings are announced, if it's announced in the morning, that day, the most it's up or down is 50%, is 20% on average. Or if it releases earnings after the close, the next day, the most it's up or down on average in the last 5 is 20%. So right away, that tells me, okay, maybe this earnings release, we expect 20% of movement, or let's say 17% of movement to be conservative. So now I'm going to take you back to the options. We look at Sedge. Right here we can see 9.7 on 51. That's about 18%. Okay? So the market is pricing in 18% of movement for 42 days. We just did that analysis. If I take you back here, max move over the last 5 earnings period is 20%. So we said, let's value it at 18%. That's exactly what the options pricing is right now. But what the chart is not showing us, where the real value is great. It's trading about 18% right now. But what about the other 41 days? One of those days is earnings. Fine. I'll give it 18% for one of those days. But what about the other 41? You're telling me that those are valued at 2% or 3%? Hogwash. That makes no sense whatsoever. So now we're backing into a trade because I'm getting the feeling, and I'm looking at the data and looking at the historical data, these options are dirt cheap. So now what I want to do is, what options do I want to buy? Well, we can look at August. Consider these 45s or 46s. Let's buy a 10 lot. So if we buy a 10 lot, it's going to be $2,200 of risk. Okay? Right here is the delta. So if we buy 10, we're short 270 deltas. Okay? So we buy 10, we're short 270 deltas. Now I'm going to use that information to hedge with DQ. Because what we can do with DQ, and these don't have the great options liquidity that we have in Sedge, it's not terrible, but I would go and buy 250 shares of DQ. So overall, the entire trade idea, and this trade idea will be shared with the Premier members in our Sunday week ahead. Every Sunday, I share 8 to 12 trades. This is going to be one of those trades. This is the process to find those trades. I like buying a 10 lot of Sedge, 45 strike, 46 strike, it doesn't really matter. Mid-market is fine. And then to hedge Sedge, I want to buy 250 shares, or 200 or 300, it doesn't really matter, of DQ. So overall, I have a relative pair trade. And that allows me to get short the expensive solar company, buying the inexpensive solar company, but we also have a reason of why we want to be short sedge. This is really our trade. We're just using this to protect ourselves, because if DQ sells off, we have to naturally expect that the solar industry is selling off, and therefore sedge is selling off. But the thesis is that sedge is going to sell off way more than DQ because of the increased competition, because their landscape is changing. The tough thing is, we need it to happen in 42 days. If you want more time, go ahead. Go out to October, go out to December. You can go out a full year, but it's going to cost you more. So that's going to be what you need to think about, is your time frame for this trade. I love it. That's exactly what I'm looking at, guys. And that's the 5 steps that I went through to find this great trade for my Premier members. Thanks, Jonathan, Active Day Trader.